wage has recently been increased in New Zealand. The existing amount of $16.50 per hour has been increased to $17.70, and this is to be followed by a further increase this year to $18.90 per hour. Let's have a look at this and the effects it will have on New Zealand workers and the economy as a whole. First, however, please help this channel by giving this video a like. Every like will help the YouTube algorithm. Thank you in anticipation. Now to the main focus of this video, the minimum wage. The minimum wage is a government enforced wage. It is a minimum rate that must be paid to workers in New Zealand, irrespective of whether that wage is earned or not. The government is great at giving away other people's money, just like all socialists. Let's remember some basic facts. Socialists believe that labour is the only currency and that it must be protected and enhanced at all costs. Socialists do not understand that capital is a reflection of past labour. By this I mean that one's past labour, either personal or ancestral, can be converted to savings and therefore to capital. The investment of this capital is necessary for any current labour to be effective, and those who risk this past labour or capital deserve a reward if their investments are successful. Once again, a basic capitalist concept. You provide a good or a service at a price that the customer is willing to pay, then and only then do you get paid. Make a mistake in this assessment of value and you will lose. Socialists do not understand this. So how does all this relate to the current topic of the minimum wage? Wages must reflect the value of the labour that was used to create the good or service. If this value is not there, then the enterprise that is paying that wage will eventually fail. When minimum wages are enforced from the outside, then there is a risk that the accompanying value will not be there. In New Zealand, there is an underlying inflation of just over 2%. Therefore, any increase in the minimum wage above this rate of inflation must be reflected in an increase in the productivity of the worker, who is the recipient of this wage. If that increase in productivity is not there, then the result is an increase in the rate of inflation. Inflation is not really an inflation in the value of anything. It is a reflection of the reduction in the value of money. Any over-the-top increase in the amount of money someone receives for their labour will therefore be gobbled up in the increase in the costs of living. Nobody wins in the long run. The increase in the rates of minimum wage as dictated by the New Zealand government is 7.3% in 2019, and the promised increase in 2020 is another 6.8%. Both of these are above the rate of inflation, either actual or predicted. Therefore, the increases will definitely result in an increase in basic prices, so eliminating any long-term benefit to the employee. If the employer cannot afford to pay these minimum rates, then they will not employ people, and if the work is essential, will look to other ways of having those jobs completed. Just look at supermarkets at present and their self-checkouts, at banks and their reliance on the internet for services, and finally the number of robots that are now used in the car assembly plants. These are all evidence of the cost of labour being supplanted by other means. Now, if the low-paid do not benefit from these increases in the minimum wage, then who does? Well, the first beneficiaries are unions. Where minimum rates are paid, there will be a call for corresponding increases in pay rates to be paid to their members. Employers are also in favour of minimum rates. Yes, that's right. Any increase in basic costs, plus a little bit more, is passed on to the consumer and blamed on the government. Sorry customers, but I had no choice. Also, the possibility of someone cutting the price of the goods is lessened, as all employers are forced to pay the same. Where living costs are less, there can be an advantage in setting up a new business. Hence, small-town New Zealand can be attractive to new investors. However, universal minimum wages will eliminate some of this attraction, so putting these small towns at a disadvantage. The next beneficiary is the government. Increase the wages of the workforce and you also increase the tax take. Using the present tax rates in New Zealand, someone who is on the minimum wage and works 40 hours per week will earn nearly $37,000 per annum. Just a little overtime and you are very close to the next tax bracket and the loss of 30% of any increase. So where is the incentive to work harder? On top of this is working for families. This is a system of tax credits for those earning low wages and trying to support a family. Once you earn just over $40,000, you are subject to a reduction in the benefit of working for families of 25 cents for every extra dollar you earn. Add these two together, then the loss is over 50% of any increase. Again, where is the incentive to earn extra? All this, however, means an increase in the tax take for the government. So you now know why the government is so happy to increase the minimum wage. So how do we overcome these problems? First, by reducing the tax take by the government. Any tax reduction will mean more money in the pockets of the workers, but will not increase the cost of doing business, a win-win situation. Also, more money in the economy means more GDP, therefore more tax, so the government will win as well. I won't hold my breath though. Both the left and right-leaning parties are more reluctant to reduce their own incomes even in the short term, but the present Labour government is even more intent on taxing more and spending more. Remember, socialists know better how you should live and how you should spend your money. Whereas leaving the money in the earner's hands in the first place is the cheapest option for the government and the best for the taxpayer. It costs money to collect money and it costs money to redistribute. Now a short summary of the facts as I see them. There does need to be some regulated minimum wage, as there are unscrupulous employers out there, but it must be set like an ambulance at the bottom of the cliff and not a fence at the top. Any minimum wage set too high is inflationary, and as such any perceived benefit is short-lived, as rising costs rapidly use up the increased pay. Workers do not in the long term benefit from these increases, but governments do, with the increase in their tax take. Do a cost-benefit study. Who bears the cost and who gets the benefit? If they are not one and the same, it is not a good idea. Well, that's the end of this video. If you would like to comment, both positive and negative, feel free. It is good to have a two-way conversation. Remember to hit the like button, as that will help the YouTube algorithms. Any comments you wish to make may give me an idea for future commentary. Please share this video with your friends and family. If you wish to subscribe, then you will find out when I upload a new video. Just use the appropriate buttons. Thanks for watching, and we will see you next time.